This is Jonathan Carter doing a PEST analysis for Mexico for Dr. Romero's class, the International Business Management class at LSUA. PEST and the PEST analysis stands for political, economic, socioeconomic, and technological. This is a analysis that is useful for foreign investors. They want to know about how the country works, about how the economy works overall in relation to other economies, the socioeconomics of the country, kind of the way that everything works there compared to maybe the country they're in, and technology, the technological aspect. That is extremely important now in 2020. So to begin, we'll talk firstly with the political aspect. Mexico is a very stable government compared to most world governments. That is a hard word to quantify, stable, but from an American investor's point of view, they are stable. They are free traders. They haven't had coups or any problems that a lot of have seen in Latin America in the past 50 years. They are not communists like Cuba or Venezuela. And overall, it's just a pretty solid place for foreign investors to think about, especially Americans, especially Americans. Overall, in the past year, Mexico has attracted 12% of foreign investment, of all foreign direct investment in 2019 went to Mexico. So if we look at our competitors and what they're thinking, they are thinking Mexico looks like a really great place for investment, and it really is, especially in the manufacturing sector. A quick history about Mexico: it's been transformed in the past 30 or 40 years. If you look at their GDP and exports back in 1980, before NAFTA, the North American Free Trade Agreement, they are exporting 40% of their exports are in oil, basically, or petrol. That is okay, but anyone could do that. It's if you have petroleum, you can export it. So very quickly in the past 30 or 40 years, Mexico has transformed from a country that would mine their own natural resources and export it to big countries like the United States or China. That still happens. It's been transformed now into a country that exports computers, high technology, state-of-the-art automobiles, everything you need for a modern society. Mexico manufactures it, and they have access to all the resources they would need, a very large workforce, low unemployment, like I said, over 120 million residents, and a really good business culture with the free trade mentality. Briefly mentioned earlier was NAFTA. NAFTA, North American Free Trade Agreement, simply, well, it's not simple, but for our purposes, we'll say that it allows the countries of the United States, Canada, and Mexico, or the North American countries, to freely trade across borders. And it's been that way since Mexico has been part of the World Trade Organization in 1995. During that time, that is when Mexico transformed. It's been good for everyone. Well, almost everyone. There are definitely winners and losers with NAFTA. It now forces all Mexican businesses to sell their products at the world market price, and that really hurts rural farmers outside the cities. But overall, you've seen a large growth in Mexico in the past 30 years. Most economists agree it's a good thing. look, we'll move on to the economic part now and well, we've already spoken a little bit about the economics. I'm thinking about their exports. They, like we said, they export mostly high tech equipment, automobiles, computers, and almost all of it to the United States. The United States buys more than 80% of Mexican exports, and that's huge. You would expect the United States to buy 1/3 or less based on the volume they produce and where the United States is on all that stuff. But the United States purchases over 80% of Mexican exports. That's good for everyone because American businesses can get what they need at a good price, know that they're not going to have all of these extra taxes or new legislation that changes how or when they can get their product. It just makes business easier. And that's why Mexico rates so high in the ease to do business index. They're one of the easiest countries to do business with, according to the IMF. Although it's not all good for Mexico, the IMF also did say that Mexico faces 3 structural problems: corruption. Let me see. I know we're not supposed to read. Corruption, informality, and crime. We'll speak to those real quick. I don't want to go over. The cartels in Mexico are a really big deal. Sometimes they influence governments overly. There's a lot of crime, and I have a friend in Mexico who owns a small pharmacy close to Mexico City. He is paying protection money to the cartel that works in his area. They launder their money in legitimate businesses and put people out, good Mexican workers out of business, and it's terrible. But I definitely agree with the IMF that they do have a crime problem in Mexico. Quickly, we'll move now to the technological portion. Mexico isn't known for being a hub for technology, but it must be considered in any kind of foreign investment because it's 2021. It's the most important factor, possibly. A lot of technology has been brought to Mexico with foreign investment in the past 20 years, so that a lot of the plants in Mexico now are state of the art. They are some of the best, highest quality manufacturing plants on the planet right now. They're in Mexico, around Mexico City especially. You have people like IBM and Walmart, lots of other American companies that are very invested in Mexican manufacturing. So, to answer the question, would I want to invest in Mexico as a foreign investor? Yes. In almost any industry, I would say yes, especially manufacturing. I would want to invest in Mexico for sure. I'm trying to do this all in one take and not go over time. Thank you so much. God bless, and goodbye.